Hi everyone, welcome to RHB Bank's podcast series. I'm Nova Lui, Head of Investors Advisory. In today's podcast, let's look into the major fund flow in the market and discuss some potential fund ideas for investors to consider in Q4 2021. Based on the industry data, most fund flow in the market goes into global equity fund, which stands at 1.4 billion ringgit. However, if you combine both the inflow to equity China and equity Greater China fund, 1.67 billion ringgit were invested into these funds in the past one quarter. Investors who are more conservative invest into Malaysia bond fund, while others participate in moderate risk asset by investing into global mixed asset fund. Fund flows into Chinese-related equity market are likely driven by investors seeking to buy at dip and continue to cost average into Chinese equity market when both Chinese onshore represented by FTSE China F50 Index and offshore market represented by Hang Seng China Enterprise Index are both down by 15.77% and 17.67% in Q3 2021. Both to note that as of end of September, total industry exposure in Chinese equity fund is only 4.2%, and exposure in Asian equity is only 6.7% by total asset under management. Most of the fund flow out are contributed by fixed income space. However, interesting to take note that there is relatively high outflow from equity funds relating to technology sector. Investors may take opportunity to realize some profit and partially pour back to cost average in area where investors have suffered losses. Macroeconomic backdrop remains relatively supportive for risky assets as incoming data saw ongoing strength in PMIs and earnings. This momentum looks set to continue as vaccination efforts bear fruit and economies open up. Favorable liquidity condition is likely to continue at least until later in the year. As many monetary policy tightening is likely to be gradual, we are overweight in equity versus fixed income in Q4 2021. For investors who wish to focus investing into fixed income assets, may consider Principal Lifetime Enhanced Bond Fund. The fund focuses its investment in Malaysia fixed income market, but the fund mandate allows the fund manager to enhance the portfolio return by investing up to 10% exposure in Malaysia equity market. The fund has generated 18.32% in the past 3 years. Investors who prefer to enjoy exposure in both fixed income and equity assets and wish to let fund manager to decide the allocation for them may consider mixed asset funds instead. RHB Global Sharia Dynamic Income Fund invests into global equity and fixed income instruments adhering to the Sharia investing principle. The fund is managed by RHB Islamic International Asset Management and advised by Schroder Investment Management Singapore Limited. Since inception, the fund has generated 14.8% return to investors. Investors who can take higher risks in mixed asset space may consider funds that invest into Malaysia markets such as Affin Hwang Select Balance or Asian mixed asset such as RHB Asian Income Fund. Both fund performance in the past 3 years are 29.68% and 14.6% respectively. The complex and unpredictable effects of COVID-19 pandemic serve as a harsh wake-up call for decision makers that now more than ever, the issue of societal well-being and sustainable development will take center stage in all social, political, and business affairs. Governments and businesses are realizing that environmental and social responsibility goes hand in hand with corporate profitability, and since the pandemic, environmental, social, and governance (ESG) value has become a central component to all investment decision-making processes. Investors who prefer a diversified portfolio of global equity fund with ESG integration may consider RHB iGlobal Sustainable Disruptor. Since inception, the fund is up by 8%. The fund is also managed by RHB Islamic International Asset Management, while JP Morgan Asset Management Singapore acts as the investment advisor for the fund. Investors who prefer an ESG fund with Asia focus may consider RHB Asia Sustainable Leaders Fund. The fund is newly launched in 20 September 2021. The external investment manager for the fund is RHB Asset Management Private Limited Singapore. The fund invests into companies where its products and services bring positive environment and social impacts in Asia. MSCI Asia ex-Japan ESG Leaders Index has outperformed the MSCI Asia ex-Japan Index in the past 3 years. Malaysia is a laggard market comparing to its peer in ASEAN market. With the high vaccination rate and economy reopening, there is a potential of further recovery in Malaysian equity market. KLCI market is relatively flat in the past few years. However, we have seen recovery in the past 1 year, where in the same period, Affin Hwang Select Opportunity is up by 20%. RHB Asset Management has recently upgraded its view in ASEAN market. ASEAN economies are starting to open up with vaccination rates on an upward trend. This will lead to upswing in economy growth, which has lagged the rest of Asia. Furthermore, strong commodity prices should benefit economies like Indonesia and Malaysia. Investors who wish to participate in this area may consider TA Southeast Asia Equity Fund. The fund's external fund manager is Lion Global Investors Limited, Singapore. The fund performance was relatively flat in the past 3 years. However, in the past 1 year alone, the fund is up by 26.37%. RHB Asset Management has a neutral view in Chinese equity. For investors who wants to participate in the long-term growth in Chinese market may consider RHB Sharia China Focus Fund. Since inception in 13 November 2018, the fund has increased by 103.38%. The fund focuses its investment into China A share market. Investment advisor of the fund, China AMC, believe in potential upside by investing into technology and consumer sectors in China. Investor who wants to have a tactical allocation in global technology-related funds may consider RHB Global Artificial Intelligence. The fund fits into Allianz Global Artificial Intelligence, which is managed by Allianz Global Investors. Since inception, the fund is up by 141.75%. Investors are advised to diversify in their investment portfolio. Each product has different risk class. RHB Bank's relationship managers and investment specialists stand ready to work with you to formulate an effective investment strategy to achieve your long-term investment objective.